Yeah, so guys, welcome again. If you have been following me, I believe you must have learned a lot, especially if you are new in Forex, right? So, we've talked about Forex for beginners. I've told you a lot about, terminologies in Forex, and I've told you what can make you fail in Forex, all right? And I think in my previous video, I also spoke about a little about lot sizes, okay? And I also told you about risk management. And now I would like to take you more on trends and zones, right? I have already analyzed trend and zone on my screen, on the white screen. So I want you to follow up and make sure you understand what trend and zones are, okay? So it's very important. And we'll be moving on to break of structures today. Okay, so I want you to know what break of structure means. Okay, so but before you identify a break of structure, you must identify the trend of the market. It's very important you know the trend of the market before you identify break of structures. Okay, so a break of structure is simply, for instance, if we are in an uptrend, you have identified that, oh, this trend is generally an uptrend. Okay, for you to really know that the trend is going up, you must identify at least two higher highs and two higher lows. Okay, and likewise, for you to identify that a trend is coming down, you must at least identify two lower highs and two lower lows. It's very, very important. And we'll be talking about that practically on my white screen now. Okay, I'm going to take you on the white screen and we'll talk about that already. So, guys, I want you to sit back, relax. Let me take you to the whiteboard and let's analyze this. Okay, cheers, guys. I'm still your king, Leba Tano, Leba FX, Leba University. Let's go. And don't forget to subscribe to my channel. If you are new, subscribe to my YouTube channel. Also follow me on Facebook, on Twitter, follow me on Instagram, and also follow me on TikTok. Okay, let's make this happen, guys. Cheers.
Hello guys, you're welcome to today's tutorial. Okay, and if you have been following up, I told you I was going to take you on break of structures. Please, if you have not subscribed to this channel, don't forget to like and subscribe to this channel. For those who are new in Forex, this is a perfect place to be, because if you have watched my previous videos, you see that I've been taking you step by step on what it entails to trade Forex. Okay, and in the previous video we talked about trends and zones, and as you can see on my system, I marked up, I was able to draw structures of an uptrend, downtrend, ranging markets, and I think we also talked about zones as well. Okay, so please, if you have not watched the video, please kindly do so. Okay, go to my page, search for this video, and make sure you watch it till the end. It will help you a lot. Don't forget to subscribe to this channel. It will take you nothing, just hit the subscribe button so that when I drop videos like this, you can always be notified. Okay, so like and subscribe, and if you have any question, don't forget to ask me in the comment section. Okay, I'm going to reply you, or you chat me privately. So guys, today we'll be talking about market structure. Okay, what's market structure in Forex? What's market structure? Market structure simply means a situation where the market gives us an uptrend or a downtrend. Okay, but before you identify an uptrend or a downtrend, for an uptrend you must identify at least two higher highs and two higher lows, and for a downtrend you must at least identify two lower highs and two lower lows. Okay, so it's very, very important. Now, for a break of structure, let me write that so that you get that. That will be our main topic today. So we're talking about break of structure. Oh no, that's not what I mean. Yeah. So we'll be talking about break breakout structure, sorry, breakout structure. Yeah, so now what is breakout structure? Now in breakout structure, we are simply talking about, first of all, before you identify a breakout structure, you must identify the trend of the market. It's very important you do identify the trend of the market. Okay, so for instance, let us cite an uptrend for an instance. And what did I tell you about an uptrend? I already told you that in an uptrend, okay, you must identify at least what? 2 higher highs and 2 higher lows. Okay, it's very, very important. You must identify at least 2 higher highs and 2 higher lows in an uptrend. Now, as you can see, why do we call it a higher high and a higher low? Please, if you have not watched my previous video, do so I don't make this video too long. Okay, so I told you this is a high, this is a high, this is another high. Okay, what happens is that this high was formed and this high is higher than the previous high. Okay, and this high is also higher than the previous high. And for the lows, you can see that we have this low, we have this low, we have this low. You can see that this low is higher than the previous low, and this low here, sorry, you can see that this lower high is higher than the previous low here, and this lower high is also higher than the previous low. Okay, so this makes this an uptrend. To identify that, at least you must identify 2 of these formations. Okay, and at least you should be able to take your trend line and draw it in such a way that it can at least touch 2 of these points. Okay, at least 2 of these points. Okay, in that case you will now identify that yes, truly we are in an uptrend. So in that uptrend market, what do? You look for opportunities to buy. Okay, in this kind of market, you don't look for opportunities to sell, you rather look for opportunities to buy. So in this market, if you want to sell, you make sure you sell short and buy long. Okay, it's very, very important you know that. So now, like I said, we'll be talking about breakout structure. Simply, what is breakout structure? In the forex market, okay, a structure is broken when, for instance, in an uptrend, when a high is formed that is higher than the previous high. Okay, so you can see that this was the first high formed, we had a low here, and then another high is now formed, and this high becomes higher than the previous high we had here. You get, it's now higher than this previous high. Now what do we call this? We say it is, this structure is broken because why? Now this is it. You can see that this structure is broken already. Okay, now we had the break of structure from here. This structure that was formed has been broken from this point and gave us a new high. Okay, now it came down again, gave us another low, and then gave us another high that broke the previous structure that was formed, or the previous high that was formed. Okay, until you have this in the market, you can never say that the market is what? Is in an uptrend. So you see, this one has also been broken. The former high that was formed has been broken, or the previous high that was formed has been broken. So this is what we call break of structure. So this continues until we have what? The market corrects itself. And how does the market correct itself? So let's say this will keep going on. We'll keep having this another previous high, another low, and then here the market will form an equal high. Okay, so once the market forms an equal high, we now say that okay, this market is able to correct itself because why? Probably the candlesticks have been coming here but cannot break this high, this previous high that was formed. Once the previous high cannot be formed, then we look at what? A change in what? Change in trend. Okay, we look at a change in trend. Okay, so what happens here is that the market starts coming down and then breaks the previous low that was formed here. Okay, and breaks this previous low. Once this previous low is broken, then we look at the market that okay, this market trend is rather what? Changing into what? A downtrend. But you can't identify that until we go to the next. When I start telling you about downtrends, okay, when I tell you the downtrend, you understand what I'm saying. Or I tell you about change of market structure, you understand that. Okay, so for now we'll be having what? Higher highs. Okay, that is higher than the previous high. We have another high higher than the previous high. Okay, so this is break of structure. Once you have this broken and gives us a new high, then we say that the previous structure has been what, broken. You can see this now. This was the high we had here. We had a low here, and then it came up and then gave us a new high that broke the previous high here. Okay, so we say what, we have a break of what, market structure. So that is it. So this is what we continue until we have a correction here. Okay, until we have this correction that gives us what, an equal high. And once it gives us an equal high, we call this point, this is a point where we call resistance. But I'm going to be taking you on support and resistance in another video so that we don't make this video too long. So I hope you understand what break of structure means now. Okay, so like I said earlier, a break of structure is simply in an uptrend. Okay, remember I told you to identify an uptrend, you must at least identify two higher highs and two what, lower what, and two higher lows, and two higher highs, two higher highs and two higher lows. It's very, very important. Two higher highs and two higher lows. Two higher highs and two. I'm repeating this so you get used to it. So it's very, very important you identify this. So how do you identify this? You identify this when the previous high is broken and gives us another high in an uptrend. So the same thing is applicable to a downtrend, right? In a downtrend, this is what we get in a downtrend. Like I told you, in a downtrend, you must identify what? You must identify at least two lower highs and two lower lows. So let's say this is a downtrend, okay? Now, what makes this a downtrend? Like I said earlier, what makes this a downtrend is that we can see that a previous low was formed here on this part. You see, there was a low here. Okay, this low is higher than this low. This low is also higher than this low. Okay, but it's on the high side. So that is why we call this place what? Two lower highs. We call this lower highs rather. Okay, but for you to identify that this is a downtrend, you must identify at least two lower highs. That's this and this. It's very important you identify that. Okay, and you must also identify at least two lower lows. That is this and this. Okay, and in my previous video I told you why they are called higher highs and higher lows. So if you have not watched it, go and watch it. It's very important you do so. Now, I also told you that to at least identify that you have a downtrend, at least you should be able to carry your trend line and draw it in such a way that it can at least touch two of these guys. Okay, two of these guys, and also, you know, although this is not too necessary, okay, down here, but then sometimes you do it so that you identify when the market has broken a particular trend. So you draw it like this. Now, this is a downtrend. How do you identify that, okay, there's a break of structure in the to the downside? Okay, so you identify this when you see that a previous low, a low is formed after a previous low. Okay, so this is it. You identify that at least this is a low. Okay, we broke this low, okay, to form this low. You see, we also broke this low. You see, we form this low. Okay, so once you start seeing break of structure to the downside side like this, you then identify that, man, this is what, a downtrend. But remember that there must be a break of structure. At least the market must get to this point where the previous low was from and break that low to the downside. Okay, it goes up to retest the same point and then comes down again to break this low. But once the market cannot break the previous low, then you should call this place a support level. Okay, this is where we call a support level. Okay, so we can write that down. We call this a support level. Why is this not working? So we call this what? A support level. So at this point, this is where what? This is where buyers are usually what? Standing to see how they can take the market up. Okay, so once you see that the previous low cannot be broken, buyers will be here to see that they push the market up, and this is where you start looking for buy opportunities, okay, to take the market to the upside. Okay, now how do you know? Anyway, we'll come to that. Let me not push the video. For today we are treating break of structure. I'll take you on support and resistance. Okay, so now this is where buyers will be to take the market. And remember that the support zone is also known as what? It's also known as demand zone. Okay, while the resistance zone is also known as the supply zone. Okay, so in this point here, where the market goes up and fails to break, a particular level to give us another high, we call that zone what? We call it resistance zone. Okay, so we call this resistance. Sorry. So this zone you see is called resistance. Okay, so this is where sellers are usually staying to see how they can take the market downward, because they have seen that what the market cannot break through the previous high. Okay, they want to stay here and buy down. So I'll tell you how to also take your trades as we move along, where to buy, where to sell. So in this market, at resistance you sell, at support you buy. So take note, at resistance you sell, at support you buy. So but for now, as you already know, I've told you about break of structures. So please go and identify as much as you can, okay, on your chart. So if we go to the live chart, you will see exactly what I am talking about. This is a live chart. This is a live chart. So from this chart, you can see that I already marked an uptrend. Okay, let's use this. Oh gosh. You can see we already have an uptrend and we have a downtrend market. So you can see live that what I have taught you is exactly what you will see in this market. So let's make it a bit good. Okay, so you can see that in this market we have what? We have break of structures to the upside. Okay, we keep having highs higher than the previous high. Okay, we keep having highs higher than the previous high. We keep having high higher than the previous high. We keep having another high higher than the previous high. So how do we attain this? It's because the previous high has been broken. Okay, once the previous high is broken to give us a new high, then we say that okay, we have a new high, and the market is then giving us what? An uptrend market. So this is it. I can mark as many as possible. So this high is higher than this, so the structure was broken around this point. Sorry. Where do I get this? Rid of this guy. Okay, let me get another one. So you see, as small as it is, but it gave us a new high here. It gave us a new high, and if we would take this guy higher, you see, and now we had another break of structure to the upside that gave us a new high here. Okay, so where did this break? This broke at this point. At this point, okay, there was another break of structure to the upside. As you can see, it went up to this part and did what? And gave us another low here. Okay, and then what happened? The low was broke. The previous high was broken. It went up again and broke this high. So let me bring it a bit so you see it properly. Yeah, I think this is clear enough. Now what happened here is, you can see, let's clone this again. You can see that the market now went up again, gave us a new high, came back and did a retest and went and broke this high that was here. So you see how the break of structure is occurring. That's how you identify that the market, but the fact that the market is coming down doesn't mean that the market has changed into a downtrend. No. Okay, so that is why we tell you, in this market you buy short, in an uptrend market you buy short and you sell short and you buy long. You can see that it was a short sell here, and here we have a very long buy to this point. You can see this was a short sell and here we have another long buy. You can see that this was a short sell and here we have another long buy. So I don't know if you are getting it. So that is how you identify an uptrend market. Okay, you can see a high here, you can see another high forming higher than this previous high, you can see a low here, you can see another low forming higher than this previous low. That is why we call it higher highs and higher lows. So you must identify these two structures before you can then say that this market is in an uptrend. So you put in your money here and then you buy. Imagine buying to this point. Do you know how much you would have made before the market now gave us an equal high here? Okay, because it couldn't break through this guy, this high, and then it started coming down, broke through the previous low and gave us another what? Started giving us lower highs and lower lows, lower highs and lower lows. So you understand what I'm saying? So you can see these are all breakout structures. Okay, so we clone. The market broke another structure here. You see the structure it broke here, went up. So if we clone again, it will give us another one. So you see the practical example of what I was telling you on the line chart. So you see, we'll have to take this guy up. Sorry. So you can see. So the market keeps breaking structures until it got to this point where we couldn't break this, the lows that were forming. You see these guys that were forming, they couldn't come up here to break this guy. Okay, so it was a battle here. We call this a ranging market. I already taught you on my previous video. So you see it was a battle here, and then the market gave us a fake breakout from the ranging market, but couldn't still beat the high that was here. And then what happened? The market started dropping down and started giving us what? Lower highs and lower lows. So you see the market started breaking to the downside. Okay, so you see the market breaking. Okay, it gave us a low here, the market went up, came down again and beat this previous low and give us a new low. Okay, give us a new low here. Let's put it here. Okay, so you see the market gave us a new low and then went up, came down and broke this previous low that was formed here and give us another new low here. I hope you are following, guys, and give us another new low here. What happened here? You can see what happened here. The market started ranging. The market ranged again and broke to the downside. Okay, it broke to the downside and then gave us what? Give us another low here. Okay, give us another low here rather. Listen. The market gave us another low here. Okay, now when the market came down, it broke this low, gave us another low down. Now when it give, now let's see where the trend changed. Okay, when it gave us another low here, what happened? You can see this low, the market went up, came down to see how it can break this final low, but it couldn't. So you can see this candlesticks came here, struggled, okay, kind of gave us a double bottom and started going up. Now it went up and broke this previous high that was formed here, okay, before coming down. Now the market went up, came down to retest, and then went up, gave us an equal high here, and then you see there was a ranging market, and the market finally went up, all the way up, and started giving us what? Break of structure. If I start drawing the same thing I've drawn there and put it together, you see that we start having higher highs and higher lows. You see, this is a high, this is a low, this is another high. Okay, so we are currently on gold. So you can see I can as well, if we were analyzing, I can easily analyze this market and tell you what gold is going to do. Very easy. So but for now, that is what you need to know. Okay, this is what you need to know for now. This is what you need to know. Break of structure. I'm also going to take you again on market analysis. We are going to analyze technical analysis, okay, probably in our next video. So keep watching And make sure you subscribe to this channel. Subscribe. I am teaching you this for free of charge. So subscribe. And for those who probably want to join my Telegram channel, please, I have my Telegram link. Okay, for now I don't want to put the link on YouTube so that these videos can keep going viral, but with time I'm going to link the Telegram link here, so you click on it. But for now I think you just need to easily comment on the comment section. Just say send me the link, and I'm going to send you the link privately. Okay, I will send you the link privately, so you can join our Telegram. There we give free signals. We analyze the market and give free signals. Okay, so it's very, very important you do so. So don't forget, subscribe to this channel and stay tuned so that whenever I drop videos like this, you are going to get it. And for a newbie, you know you have a lot to learn, so please don't miss out on my videos. It's very important. Don't miss out. I'm still your King Lebatano, Leba FS, Leba University. Make sure you keep following, and I tell you, you make money in dollars. Like I always say, trading is not a get rich quick scheme. You must take it step by step, okay, until you get there. So if you have any question on breakout structure, okay, or market structure, please let me know. Comment and I'm going to put you through. Okay, so I'm still your King Lebatano, guys. Bye for now.